Get your calendars out and mark the date, 22nd November 2023. 22nd November is the date of the much awaited IPO by Tata Technologies. It is the first IPO from the Tata Group in almost 2 decades, so it's kind of a big deal. Tata Technologies, in case you're unaware, is a global engineering service company that offers product development and digital solutions that so far has been functioning as a tech arm of Tata Motors and has pioneered the EV revolution in India. Though the global giant spun off as an independent company in 1995, it still majorly caters to its parent Tata Motors business. The company offers 4 services: digital enterprise services, educational offerings, product and value-added reselling, with the recent spotlight being on their e-R&D services. The company has zero debt. In fact, last year it generated more than rupees 4,400 crore in revenue and a whopping rupees 707 crores in profit, which is a 25.2% revenue growth and a 63% profit growth year on year. In FY 22-23, Tata Technologies has a price to earning ratio of 32.5 to 30.8, which is lower than most of its rivals. Here are a few more financials for you to have a look at. Now that we know some of the key things about the IPO, let's dive a little deeper into Tata Technologies e-R&D services that is sparking people's curiosity. E-R&D, or engineering research and development services, can be broadly broken down into software, embedded and mechanical engineering services. Globally, we are witnessing the trend of automobile players scaling up R&D. The complexity of automotive e-R&D has been rising constantly over the years, and now the shift will be massively focused towards 3 trends. 1. The use of AI in autonomous automobiles, meaning that new cars come equipped with state-of-the-art environmental sensors that detect objects, providing enhanced levels of vehicular motion control. 2. OEM manufacturers are looking at creating connected vehicles that can communicate with other systems outside the cars. This involves connectivity such as navigation, diagnostics efficiency, roadside assistance and payments. 3. As policies to reach target carbon levels increase, governments globally would see policy change improving the transition towards electric vehicles. With this in mind, one of the top priorities for the industry is electrification. And Tata Tech already has its foot in the door to cash in all of these 3 latest trends. E-R&D services have higher headroom for growth and outpaces the traditional IT services industry. Because of the high maturity of information technology in business process management outsourcing and the nascent maturity of e-R&D outsourcing, the e-R&D industry has a longer runway to deliver stronger growth than compared to the IT services industry. If you are a little confused after this information overload, here's a simple SWOT analysis to help you out. Oh, and by the way, if you have a share in Tata Motors, you should know that 10% of the OFS is reserved for you guys. But before you consider jumping on this bandwagon, here are 3 things you should know about this IPO. Number 1, this IPO is an OFS. Confused? Well, an offer for sale is a simple method in which the promoters of the company are allowed to sell a part of their share in order to reduce their holdings, wherein the entire funds raised would go to Tata Motors along with other selling shareholders. Number 2, the issue size has been reduced from its initial plan of 9.57 crore equity shares to 6.08 crore equity shares. And number 3, the main objective of the offer is to make the company a public listed firm on the stock exchange and carry out the OFS. Do you think Tata Technologies will be the next TCS as many in the media are calling it? Let us know what your take is on this IPO in the comments below.
Investments in security markets are subject to market risks. Read all scheme-related documents carefully.